Hello traders, this is Ken Calhoun, daytradinguniversity.com and forexonfire.com. In this example, I'm going to show you how to use the RSI indicator to help identify overbought and oversold conditions in your currency pairs, and more importantly, I'm going to help you identify the difference between false breakout signals and genuine overbought signals, as well as how to look at the step parameter and your percentage bands if you're using 20/80 or 30/70, and some of the critical differences in using those to help you identify trade setups. Let's take a look here at our dollar yen on the 16th, just a couple of days ago. Here's an example of where an RSI got to near overbought at the 80, but if you had incorrectly shorted it there thinking that it was overbought, you would have been stopped out because it moved up strongly on the following session all the way up here to the 121.3 from its previous range of 127, 128. And if you're using a step 14 RSI with 20/80, this is a good example of where it just almost but didn't quite break out over that 80% band, and hence would not have yielded a short signal, right? However, if we look at the RSI on the following day, this is a different story. You can see that it did get over the 80%, and sure enough, following that session, it broke down sharply, and this would have been a great short setup, and I would have placed it right here at the 121.1 or so under this trading range, because this is a overbought signal with the RSI getting over the 80. So that's the first lesson I want you to learn, is the difference between, and again, this applies whether you use 20/80 or 30/70, doesn't matter. The main thing is to use your indicators consistently. And in this example, you can see that this would have almost but not quite told you to go short, because it approached but did not get over the 80% band. Okay, see the difference? And sure enough, that would have stopped out if you had shorted here on an overbought signal, because it broke to the upside. Here though, it did break over, and subsequently it did break down for a nice drop here from 121.3 down to 120.7 before pivoting back up. So this is an example of the difference in RSI that you want to look for. So decide whether or not, first of all, decide if you're using 20/80 or 30/70, and whichever one you use, the key is to use it consistently, and don't, say go short if it gets over the 80 if you're using 20/80, or don't go long if it doesn't get under the 20. A lot of traders struggle with that. They'll say, well, it looks close, I'll go ahead and short, and you can see that would have been an expensive mistake to make. Now let's take a look at, but this one would have been very profitable, right, on shorting the correct indication. You can see it just got over the 80 there, and that is a signal. That tells you look for a short. Be ready for shorting this on the first sign of weakness, and you can see the tail of the candle here dropped under 121.2, which, using our Western technicals, that would have been the immediate S1 or support. That's a get ready to short, and this is a confirmation as this candle dropped sharply. You could see the sell-off action here from just under the 121. This would have been a very solid short signal, right? That's an obvious short, and the fact that you have a confirming indication in the previous session here of the RSI getting over 80 tells you, hey, that's the right place to short. And then on a reversal candle here, say 128, 129, that would have been a good place to cover. Now the other thing I want to share with you on RSI, and again, I don't have time to give you, a full day session on this, but I wanted to give you a very critical how-to. So that's the first one. The second one here, I like B-bands, I like RSI, I like MACD, I like stochastics for our Forex trading. In RSI, you want to test or experiment with your step parameter and see what it will yield. If you see, for example, the default is 14, let's say if we drop that to an 8, what will that do? You can see now that let me do this here. If it's 14, you can see how you do not get as many signals. Okay, the larger the number, right? Because if you look at the way the RSI is calculated, the larger the number, the more often the RSI will stay within your 20/80 or 30/70 range and will not yield trading signals, right? But the smaller step gives you higher risk but more signals. And so, for example, we drop that. If we drop the RSI to 8, you can see how those signals here, how the line moved up over 80 twice, and this would have been a false breakout signal, right? If you drop that number to 8 for your step parameter, because it would have moved up, even though this one would have yielded a subsequent successful trading opportunity. Do you notice though down here, this would have been a really good signal to either A, exit an open short, or B, initiate a new long if it gets under the 20, right? And so if you look at stepping that down, my point in all this is saying you need to test and experiment with different RSI settings, as with everything you do in trading, whether it's the charting platform you're using, the broker, the signals that you use. Be a big fan of testing and experimentation. And if you used a 6-step, you see that would have given you that signal because it did drop just under the 20 band. And again, this works equally well if you're using the 3070, which is a good recommended setting for RSI. If you're still using 2080, it works just as well. You just have to set your parameters accordingly. And let's take a look here. If we move it all the way out to say 16, what does that do to the curve? Still flattens it out. If you're a newer Forex trader, I would suggest, or one of the things I would do is set your RSI to a larger number so that it yields fewer signals, but the ones that it does yield are stronger. Okay, that's a very important tip. Okay, make sure that you test and experiment with your different settings. So, and again, to repeat that, set a higher step parameter, and what that will do is flatten out the curve and bring it closer to the middle of the range here, of your RSI range, but will yield only the strongest trading signals. Okay, and of course there's a point of diminishing returns. You don't want to set it out so far that you get a straight line and you never see any oscillation, you never get any trading signals. Again, the default is 14. What I would suggest is vary that, say, by 2 points or 2 steps. So you're looking at, say, 12 and 10, and then 16 and 18, and see for the currency pair that you're trading, or your favorite currency pairs. And again, in this example, we're looking at the dollar-yen. It provides the most consistent trade setups and the strongest ones, as this did. So this is a good antecedent example of RSI giving you a short overbought signal here the day before. Sure enough, pair dropped sharply, and that's the setup for you, right? That's a very good trading setup, and that's the type of pattern recognition skill that I want to help you develop as you're looking for profitable, successful trades in your spot FX trades. So that's it for now. This is Ken Calhoun, Day Trading University and forexonfire.com. Let me know how it works here with your RSI2. Drop me a line, Ken at daytradinguniversity.com or Ken at forexonfire.com. I'd love to hear from you. Let me know how your RSI setups are working, and again, vary the step parameter and make sure that when you do make a trading decision, it is confirmed by actually moving over or under the 20 and 80% band, or the 30 or 70% band, depending on which one is your favorite to use. Best wishes, and I'll see you next time. Goodbye.